Okay. Wagwan, a multifamily enthusiast. Welcome to another episode of the Multifamily Real Estate Experiment podcast. Now, you already know that this show is about helping you own more of America. And whether that is through apartments, funds, other assets that create cash flow on legacy, we want to give you some information that will help you own more of America. What if I told you that there is a business model that sits between entrepreneurship and investing, one that allows you to own income stream backed by proven system and established brand without starting from scratch? What if I tell you that was a possibility for you? That's what today's guest is about. Jon Ostenson is the founder and CEO of Fanbridge Consulting, a leading expert in non-food franchising. Stick with us. He has helped thousands of investors identify high-performing franchises opportunities in industries like property service, health and wellness, and business-to-business solution. He's the founder of a Inc. 500 franchise executive, author of Non-Food Franchising, the better path to business ownership, and one of the most respected voice in the franchise investment world. Jon, welcome to the Deal Lab today, brother.
Hey, Hutch, appreciate you having me.
Yes, sir. Now, before we get into all this goodness that you're about to impart on us and our listeners, do you have, let me ask you this, what is one quote or principle that drives the way you think about business ownership and investing?
Yeah, I would say I try to live my life by to whom much is given, much is expected. And I think stewarding our talents and our
Okay.
treasures is first and foremost. I've learned a lot in investing over the years. I've got a lot of criteria and filters that I use. I invest in a lot of different asset classes, real estate
Right.
funds, real estate directly, private credit, crypto, all of those types of things, public markets, but also in business ownership, which I'm excited to dive into with you.
That is awesome, man. So you built and scaled franchises with led corporate system, and you now help invest diversified through franchises. Can you, how you made the transition? What's your mission at Fanbridge Consulting now?
Like so many out there, I spent many years in the corporate world and very
Right.
thankful for the run we had, but got into franchising about 9 years ago as president of a franchise system and supporting all of our franchisees all across North America and really fell in love with the franchise model. I saw how all these diverse backgrounds could come together under a shared system of support. We launched newly minted business owners and allowed them to become successful with all of our support. Fell in love with the franchise model. I have invested in franchises myself over the years. Started my consulting business about 6 years ago, where we educate and help others get plugged in as well. Essentially, you could think of me as a real estate broker, but for
Okay.
franchises. We work with over 600 different franchise companies. It's entirely free to work with us for our clients. We simply get a referral fee on the back end. If you were to come to me, Hutch, there in Oahu and say, "Hey, Jon, I'm interested in exploring business ownership," I'd get to know you and say, based on what you've shared with me, based on everything I've seen out there, here are the top 10 or 12 opportunities that are open, looking to expand into your market that I think could be a good fit for you. And then kind of hold your hand through the discovery process.
Man, that is so cool. Now, here's what I want to know. Who exactly is buying franchises like right now? So a lot of folks right now we're dealing with the government shutdown and the great financial crisis, all that good stuff. So there's been a shift in tactics and different people, different financial strategies as well too. So let's start with the basic. We're seeing massive increase in interest from corporate professionals, real estate investors, and even some military veterans. There's a famous lady, Sanchez, that is still teaching people how to buy business. She's definitely a mover and shaker in this community. Maybe not so much franchises, but she's really teaching people how to own more for America on the business side. Let me ask you this: who's actually buying franchising today, and what's motivating them to choose this route instead of starting something from scratch?
Yeah, so you hit on a couple of the groups, the corporate refugees, as I would
Right.
call them. The Wall Street Journal has an article every day about how AI is displacing white collar jobs. There's a number of reasons why people are leaving the corporate world. We see a lot of interest from real estate investors. Over the last couple of years, you've had high interest rates, low inventory, and maybe fewer good real estate deals to be had. These real estate investors are saying, hey, what are other tax advantage alternative investments that I can jump into? And there's a lot of synergy with business ownership. We're seeing a lot of interest from existing business owners that are saying, I'm ready to expand my portfolio. And I remember all the hard work that went into it first time around. Maybe next time I add a franchise, maybe that's a better path to get to that point I want to be. But no, you're exactly right. Cody does a nice job out there. Buying an existing business can be a good option. However, from where I sit, Hutch, I get calls day in, day out from people that have been looking for an existing business for 3 years, 4 years, 5 years. Some have paid people to go out and find the business for them.
right?
All that time they could have spent building a business. They could have jumped into franchising day one, built that up. Meanwhile, they were looking for an existing business. You can always buy a business down the road too. That's one of the things I love about franchising is it allows them to jump in the game and get going.
Yeah, that's great, man. Look, yesterday I was talking to my son what the podcast is about this morning, about what this interview was about this morning, and I tell him franchising, and I had to explain the concept of franchising. I had to give him some example of franchising. My mind automatically went to a food brand. So a lot of people, to include myself, think that franchising is just about fast food and gyms. But you're saying that's less than 10% in your portfolio. Why are so many investors choosing non-food franchises, and which sector is growing the fastest? That a veteran accredited investors, maybe a small business owner already, may want to consider the section of franchising.
Absolutely. Great question. And I'd say, first off, thank you for your service. As we talked about before the show, we love military veterans. Franchising, oftentimes you'll see discounts given to military veterans because they've been trained to follow a system and execute it. That's what franchising is all about. So we've got nothing against the food guys, Subway, McDonald's, Chick-fil-A. We need them in a big way. However, my humble belief is there are easier ways to make money. There are opportunities that require fewer employees or less operating hours or less CapEx investment, or maybe they're less susceptible to consumer whims. Where we see people gravitating today is into industries that are understandable cash flowing businesses, things that aren't going out of style, non-trendy. In some cases, they're non-sexy. I joke that non-sexy is the new sexy when it comes to business ownership. Everyone wants that boring business, right? It's things like home and property services. There's so many different niches within that, from insulation to flooring to cabinets to pool cleaning to asphalt paving and line striping. That's one of the ones I'm invested in, parking lots, dumpsters, non-sexy, to things like health and wellness. And there's some maybe sexier businesses in there. There's some cool recovery modality type opportunities. Health and wellness is big. Categories like business to business services, which could be everything from freight brokerage to industrial hoses to business coaching to cost reduction consulting. Categories like kids or pets or seniors. Seniors is a huge area. We all know the demographics, right? And
Yes.
there are a lot of different ways to tap into supporting people in that constituency. And there's a community aspect and a feel good aspect to a lot of these as well. That's what we're seeing.
Oh man, yes, and so there's so many things out there that can satisfy somebody's vision of their life, the purpose they want, or the impact they want to make in the business world. Most of our listeners understand real estate. They understand how to leverage cash flow and systems. So let me ask you this, man. Why are so many real estate investors turning to franchises, and how does owning franchises compare to owning the multifamily properties in terms of return, control, and stability or scalability?
Yeah, I think there are macro factors going on in the real estate world, but why are they attracted to franchising? I think that, again, franchising, which is ultimately business ownership, you open up the tax playbook. You can offset active income with active losses, and you do so many different things
Right.
through the tax code, and the new bill that passed only further supports that. So I would say that's one. They have a tax mindset from real estate that they bring with them. But then they like a lot of the industries. I touched on home services and property services, things that relate directly to real estate. They understand. I think there's a lot of synergies there. From an ownership standpoint, I never want to sugarcoat it, Hutch. If
Oh yeah,
business ownership was easy, everyone would be doing it. It does
100%.
take work. There's a reason why you can make outsized returns. It's because you're putting in some effort to do. If it's a passive multifamily syndication, like I have invested a lot in, there's going to be a lot more effort that goes into business ownership. But if it's one that you're actively involved in, there are a lot of models that can be recurring revenue, businesses that aren't going to be disrupted by AI. They're not going to go out of style, things that will always be needed, just like commercial real estate. So I'd say in both of these, oftentimes there's getting involved in the community and building synergies with other adjacent businesses and business owners. It really goes hand in hand. Probably 2/3 of our clients invest in real estate as well. I personally do an all of the above approach. Most people are.
One of the things I've been really did talk to people about, like when you hear certain things. One thing that I've been listening to recently that I find to be super hilarious, and I think a lot of folks might find it hilarious as well too, if they're familiar with some of these little stories. And it's this guy on social media, and he had this thing that said, "Do it, lady." He says, "Do it, lady," because this lady's birthday, write her a card, and it says, "Do it, lady." It's, do what? And his rebuttal was, all of it, all at once, on your birthday. And I'm like, okay. So when you listen to that and you adapt the concept that we all have two lives, the second one begins when we realize that we only have one. Then you realize that you can do all of it all at once on your birthday. So there's really no limit to the things that we can accomplish in our life, one lifetime, except for the ones that we place on ourselves. So with the franchising concept, right? The big misconception in franchising is that it's a job, but you specialize in helping people find semi-passive or fully managed option. Can you break down what that looks like and how a business professional or investor can build a franchise income stream without quitting their day job? Because that's one of the things that we pride ourselves in real estate for passive investors.
Yeah, about half of those we work with do go with that semi-passive route. You'll
Right.
hear franchises market themselves as semi-passive, semi-absentee, executive model. It all means the same thing. The idea is you put a manager in place that you're managing, but the franchisor is also supporting that manager. Now, again, I never want to sugarcoat. So I would say it still takes a lot of hard work. If you've got a great manager in place, then you could be very hands off. You could put in almost no time in the business. I personally do that, and I see it firsthand with a lot of our clients. But if you don't have the right manager, then you're leaning in a whole lot more than you expected, putting time in. So much of the success of the model comes down to having the right person, right level of incentives set up. But if you do have that right person, then franchising makes it very doable because they can go to that franchisor for a lot of their daily support needs and their questions and leave you alone. So ultimately, the buck still stops with you as the owner, but that's the beauty of franchising is it does allow for that model. And a lot of our clients will buy multiple franchise brands over time. So it builds out that portfolio within franchising as well.
That is awesome, man. So let's get into the numbers, John. So let's get a little bit deeper into the numbers because a lot of folks want to make some money. And if they can do it in minimal time, I think that's also a really a good thing. What's a typical franchise investment look like from startup costs, expected cash flow, and long-term return? How do you compare to real estate syndication or buying a small business outright?
Yeah, all in investment. End of the day, these are businesses. You have a lot of different types of businesses, and we have clients
Right,
that do things well into the seven figures, $4 million trampoline parks as an example.
right.
But I'd say probably 80% of those that we work with, when you look at the franchise fee, the startup cost, and several months of working capital, all built into that investment range. Oftentimes, you're between 150,000 and 400,000. I'd say that's a sweet spot. Quite a few on either side, but that'd be the sweet spot. Many people are using SBA loans to help fund that. Banks
That's right.
obviously prefer lending to franchises. It's just much more predictable. Probably two-thirds of our clients will use SBA loans to fund about 80% of their purchase. Retirement plans can be another option. If you have a 401k from a previous employer, you can roll that over through what's called the ROBS program and
Okay.
purchase the business with the retirement plan. Then you pay yourself a salary from that. Some people do that in conjunction with the SBA. So certainly HELOCs are another way. As far as returns go, again, a lot of different types of businesses, a lot of different setups. If you were running the business, so you're not having to cover the overhead of a general manager. I gave a talk in Dallas to an investor group this past week, and the example I gave them was, let's just say you bought two territories of a franchise. You have some associated cost as well. Your all-in investment on the high side, you might be 300,000. That could be a property service franchise, maybe in-home senior care, something along those lines where you don't have the retail component.
Yeah.
All-in investment, 300,000. I would say you probably won't hit $1 million in your first year, but you could be at that run rate by the end of the year, going into year two. So top line revenue, about $1 million. Again, assuming you're focused on the business. Bottom line margin, you're probably somewhere between 15 and 25%. That's a lot of what we see out there model wise. So that would be
Okay.
200,000 hitting the bottom line on an investment of 300,000. So that's a 67% cash on cash return right there. Obviously, you're building an asset that you're going to be able to sell one day, and you're getting the tax advantages of business ownership. So it's a trifecta, if you will. But from
Mhm.
a strictly return standpoint, 67%. Again, some businesses will yield more than that, some will yield less, but that's a good example. It shows that you can make an outsized return, but you're putting effort in. It's not passive.
Yeah, most definitely, man. One of the most important decisions we make in real estate business when we buy apartment complexes is who's going to manage this thing, right? From the property management company to the asset manager, right? When you start talking about employing professional managers, very comparable to that property managers who's doing the day-to-day activity, communicating with other employees, ensure the trainings are done, ensure the systems and processes are followed to stay in line with the business model for different franchising. The professional manager is comparable to the professional property management company. And then, of course, you, the business owner, would be the one who would be executing the business plan, looking at the overall operations of the franchise to ensure that you're managing the managers. I want to get into the next question, John, about the pros and cons of franchising versus starting from scratch. So you've worked both on both sides, building company from ground up and scaling franchises. What is the biggest advantage and disadvantage of franchising versus starting a brand new company?
Franchising is not right for everyone. Some people are too entrepreneurial. They want to put their thumbprint all over it. They don't want to
Right,
stay within the lines. They would not be a good fit. For most people, having those training wheels, the franchise model is a better path. You're able to shortcut the success. You go into it, it's a model that's been proven out in other markets. You've got the proven product market fit. You've got a playbook to go execute against day one. You've got a franchisor on the sidelines supporting you, almost like a coach. And you have a built-in mastermind of other franchisees living the same thing day in, day out, exchanging
right,
best practices and learnings. There's things like having optimized marketing because they've learned how to run marketing in other markets. So you're not having to test everything. You've got a larger data set. You've got technology stack that you step into day one, maybe bulk buying for goods or services on the back end. And when you start stacking these up, it just brings a lot of value to the table. And Hutch, not every franchise is created equal. You've got great players out there that provide great support, and you've got ones that don't. That's where we come in to help identify the top ones. But when you start stacking it, I encourage people, you may start your own business at some point, but if you start with a franchise, I bet that business you start one day is going to be better for the principles you learned in the franchising
right.
experience.
That makes sense, man. That makes absolute sense. I appreciate diving into that. As you was talking through that, I was thinking, man, you got franchises that allows you a whole day off to go to church on Sundays. Talking about place.
Chick-fil-A.
Yes, sir. Whatever fuels your fire, whatever meets those purpose or value that or impact that you want to have in the community. And that leads me to my next question. For investors listening right now, who is intrigued or curious, but also maybe cautious, what's the framework for evaluating and scaling the right franchise opportunity?
You could certainly Google around out there and you're going to see a lot of noise. Every franchise is putting their best foot forward. And even if you see a top 100 franchise list, the company's paid to be on that list in most cases. It's a PR move for them.
Yes.
So just a lot of noise. And that's where our service is entirely free. We love helping people. I've got the relationships in the industry. I see behind the scenes. So I'd say whether it be with myself or another experienced franchise consultant that's been there,
Right.
done it themselves, I think that's really important. Partner up with them and let them take you through the process and identify the top opportunities in your market, the things that you're going to want to look for. Obviously, competitive advantages of the business within its industry, looking at
Right.
the financial models. There has to be a lot of meat on the bone, looking at what are current owners in their system saying, franchisees saying about their experience. And then a big one for me, Hutch, is the leadership team. Essentially, that franchisor is going to be your business partner. You want someone that you've got a good culture fit with, someone that's been there, done that, supported successful franchisees in their background, someone that you can partner up with. I'd say those are some of the main criteria.
That is awesome. I appreciate that. Over the years, we've seen a lot of some franchise start closing tens, sometimes hundreds of stores across the country, across the world. How does one combat those kind of operations to ensure that the things that they're choosing has some longevity? Yeah. So how do we ensure that we are buffered against franchise selling? I mean, selling off all the location or closing down the model altogether?
Yeah, again, I think a lot of those examples would be in the food space. Not all, but I'd say
Yes, sir.
the majority. And that's where, a good example, frozen yogurt was big until it wasn't, right? And that's where I like some of these industries where consumer whims don't change. Every now and then you'll have a situation where something went wrong with the franchisor. Maybe they weren't well capitalized or did
Right.
something that hurt the business model. That's why the due diligence on the front end is important. Nothing in life is a sure thing, right? At the end of the day, this is business, and business isn't for the faint of heart. But if you go into it eyes wide open, that's what I love about our exploration process is the best indicator of future success is the past experience, the past
Yeah.
historical results. So you're able to get a lot of data, talk to other franchisees in the system before you ever buy in to hear about their experience. We try to prepare people as well as possible going into it to make it the most calculated risk possible because the vast majority of franchises end up doing well. Try to avoid the pitfalls. When you have a couple thousand franchises, there's going to be a few that get the headlines that didn't do it well, which is
Right.
sad and it breaks my heart. Fortunately, we've had a pretty good track record and try to set our clients up for success.
That is awesome, man. You mentioned something earlier that a lot of our veterans may be familiar with, and that is the SBA loan. No, I've worked with in different communities, the score mentors who assist folks with setting up a business plan to get a loan from the SBA. How does your company assist folks with going through the process of getting financing, identifying the franchising? Can you walk us through a five-step process from curiosity to reaching out to you to all the way through start running a franchise in a small community?
Yeah, easy first step would be
Yeah.
read my 90 page book, Non-Food Franchising. I think that's a great primer to help you understand how franchising works. We've gotten great feedback there. So that'd be an easy first step. Second step would be jump on a call with me. Come out to our website, frambridgeconsulting.com, share your email address. We'll reach out to you with the calendar link. Happy to jump on a call, get to know you, answer some questions. The way our process would work would be I would collect some information on you and then come back to you and say, given what you're looking to do in your market, your background, your investment range, the different criteria based on what I'm seeing out there, here are the top 10 or 12 opportunities that if I were you, I would be interested in exploring in your market. You'd narrow it down to maybe 3 or 4 of the conversation. The franchisors are going to take you through a bunch of calls and presentations. They'll introduce you to other franchisees in their system. And I'm here as a resource on the sideline, holding your hand through the process. And we can always pivot during that process and go down different roads. But what I found is that gives us a really good starting point. And that's where the magic starts happening. Probably 90% of those we work with end up in an industry that was never on their radar. And it is a lot of fun to see the light bulb moments go on where they're like, gosh, they look at their spouse, they're like, I never thought we'd be doing this, but that makes a lot of sense. And so it's a lot of fun. And ultimately, if they decide not to buy, totally fine. A lot of people go through the process and then decide it's not for them or the timing's not right. Now, I will say the timing's never right. There's always a
Yeah,
reason not
exactly.
to, but that's how the process would work. And certainly, if anyone wants to buy the book on Amazon, all the proceeds go to Hope International, which is a great
Okay.
nonprofit that we support. So that's another option.
That is awesome, man. I like when you have certain conversation with folks, and now that we are exposed and we can see what you're saying, a lot of time we can't really unsee it. A lot of the folks who come and talk to you, they are inspired to explore a different level of possibility for themselves and the trajectory of their finances or the legacy that they're trying to create in their family so that they are invested emotionally, physically, of everything with their being of what is possible. I like that you start out with, look, educate yourself and possibly put some questions together that you have not yet understood, and you have explored all the free resources that have piqued your curiosity, and you still have questions. Then at that point you're reaching out to John and you're saying, John, here's where I am in our journey. However, I don't understand this and this and this. Can you shed some lights? And then you get to realize that franchise is or is not for you. And if it's not for you, then you might realize you need to educate yourself more. And if it is for you, then you start identifying the steps that you need to take to get to a good level of what you think is possible in your life. So first, start with educating yourself. Thank you so much for that ninja tip, John. To be mindful of the time, John, we're going to roll into the podcast episode. We'll make sure the link to your book is in the show notes on Amazon and any other links that we have for you. So this is the five, it's an acronym: focus and fun, opportunity, communication, understanding, and success. So I'll ask you, what do you do for fun outside of running businesses?
Yeah, enjoy playing golf with one son and coaching my other son's basketball team and take my daughter on daddy-daughter dates.
So you talk about those five freedoms, right? Those time freedoms, locations, all the good stuff, right? But also the freedom of purpose or relationship, right? You get to spend time with the ones that are most important to you. That is so cool. So what was an opportunity that changed your life?
Yeah, candidly, getting involved in franchising has changed my life. I pinch myself every day that I get to be a business owner. I worked for the man for many years, very thankful for that experience, but
Yes.
I have never once looked back and just absolutely love. Is it easy? No. Is it the challenges that I've chosen? Absolutely. And it is so crazy rewarding. Just passionate about business ownership.
That is awesome, man. What's your best communication habit for leaders or as a leader?
Yeah, I think communicate often and don't mince words. I think say it like it is, and people will adjust. They may not like the message, but tough love is needed, and just get it out there in the open. That's been my approach, and candidly, it hasn't always been my approach, but I've learned the hard way and realized that's the best way to do it.
Okay. What is one thing you wish you understood earlier about business growth?
About business growth, I think as you get older and mature in your career, you start to realize the things you enjoy doing on a day-to-day basis and not what you're
Right.
supposed to do. So I think for a long time, I was at a company where I had 40 employees and I got tired of culture meetings and dealing with HR issues. A lot of my friends are so good at leading organizations like that. What I realized about myself is I enjoy being tip of the spear, working with clients, being strategic, looking at business models. That's how I enjoy spending most of my day. So I structured my business around that, let others do the other work. So I think it's neat when you go from what you're supposed to be doing to what you're passionate about doing.
That is so cool. Last question on the focus round. What's your personal definition of success today?
Yeah, I think as we parent, our definition of success would be we want our kids to choose to hang out with us one day when they don't have to. So we're
Man,
parenting towards that relationship, going back to whom much is given, much is expected, just trying to be a good steward of time, resources, financials, meeting young guys for coffee to mentor them when you've got nothing to gain from it, but instead giving back, or being on my church call at 6:30 this morning as part of the finance committee, waking up early to help out in that way. So I try to live it out as much as I can.
there's so much value in looking towards the future and be able to create that time to invest in relationships today, especially with the ones that we care the most about, our
Yeah.
spouses, our children, our parents, to be able to invest in that time. I like that you talk about your children be willing to, just hang out with you or just call home just to say hello when they don't have to. There's definitely a true measure of investment in the most important relationships. Jon, it has been incredible, man. For our listeners who are real estate investors or business owners and are ready to explore diversification through franchising, how do they connect with you?
Yeah, come out to our website, franbridgeconsulting.com, F-R-A-N, bridgeconsulting.com. Share your email address. We'll reach out to you with a link to our calendar so we can jump on a call if you like. But then secondly, links to download our book, free copy of the book, which again, I think would be a great primer resource for you as you start thinking, and it'll get the juices flowing, and look forward to engaging and helping whenever the time's.
Thank you so much, brother. Listeners, if you're looking at Amazon, the name of the book is Non-Food Franchising, A Better Path to Business Ownership. Jon shared some of the blueprint today for freedom. Franchising, like real estate, it's all about ownership. And it's ownership with system, brand equity, and it also help you to scale your ownership, right? So whether you're investing in apartments, asphalt, restaurant, there's a path. The pathway is the same. You build income, buy back your time. It's all in the goal of owning more of America. Remember those five freedoms: financial freedom, location freedom, time freedom of purpose, and freedom of relationship. The more streams of income you have, the more of those freedoms you can create for yourself with the right systems in place. So if this episode sparked something in you, leave us an honest feedback. We'll greatly appreciate that. And remember, to whom most is given, a lot is expected. I'm paraphrasing, but I think that's a good quote. Thank you, Jon. And listeners, thank you so much for spending time with us in another episode of the Multifamily Real Estate Experiment Podcast. I'm Hutch the Marine Investor, out.